Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. Happy birthday to the Dow Jones Industrial Average. The Dow Jones Industrial Average will be 126 years old on Thursday of this week. On May 26, 1896, its first day of publication, the Dow Jones Industrial Average closed at 40.94. The Dow was devised by Charles Dow, co-founder of Dow Jones and Company, publisher of the Wall Street Journal, with Edward D. Jones. Dow was also editor of the Wall Street Journal. The Dow originally simply was the average price of 12 large stocks, hence the name. The Dow has handily outpaced inflation. $1,000 in 1896 adjusted for inflation would be $34,417 today. A $1,000 investment in the 1896 Dow Jones Industrial Average would be worth $768,602 today. The Wall Street Journal was originally 2 cents at the newsstand in 1896. $5 for an annual subscription. Today, it's $5 at the newsstand. If the Wall Street Journal price had risen like the Dow Jones Industrial Average, it would be $15.20 at the newsstand and $3,801 annually. 2022, the market was down, but several sectors showed positive signs. In healthcare, biomedical, drugs, and healthcare all advanced. In media communications, internet and media advanced, telephones were unchanged. In technology, all 4 sectors advanced. In consumer discretionary stocks, gaming and autos were unchanged. Leisure, retail, restaurants, and household products declined. In the financials, banks, insurance, and finance declined. Real estate was unchanged. Wall Street and savings and loans advanced. In the industrials, chemicals and metals advanced. Machinery tools were unchanged. Building products, aero defense, waste, and steel advanced. In the others group, oil and oil services advanced. Transports were unchanged. Food declined. Business products advanced. On the bull side, electric utilities advanced. Gas utilities declined and crossed to the bear side. Forest products and precious metals declined. Textiles were unchanged. And protection safety advanced. For the week ending May 20th, 2022, 7 sectors were unchanged, 22 sectors advanced, 11 sectors declined. 1 sector, gas utilities, crossed to the bear side. No sectors crossed to the bull side. There's now 5 sectors on the bull side and 35 on the bear side. For the week ending May 20th, 2022, the S&P 500 closed at 3901, down 122 points, or just over 3%. The Dow closed at 31,262, down 934 points, or 2.9%. Nasdaq closed at 11,355, down 450 points for the week, minus 3.82%. This past week we had a surprise to me. We had a strong Monday, Tuesday, and 115 stocks went from sell signals to buy signals, and that's the first time we've seen that happen in 8 weeks. So that was the reason I went to a buy recommendation last week. The following day was a bad down day. And voila, then we had 4 up days in the Dow Jones Industrial Average. There's down 23% of stocks on buy signals, 77% on sell signals. Our overall market score last week was 13, and now it's 15. For the first 20 weeks of 2022, the S&P 500 is down 18.14%, NASDAQ is down 27.2%. Energy is up 47.33% year to date, and is far and away the best performing sector. Year to date 2022, healthcare is down 7.9%. Media communications is down 25.3%. Technology is down 24.7% year to date. Consumer discretionary stocks is down 31.3% and is the single worst performing sector of 2022. Finance is down 15.7%. The industrials are down 15.2%. Real estate stocks are down 18.2%. Basic materials are down 9%. For the past week, the S&P 500 was down 3.05%, and NASDAQ was down 3.82%. The two best performing sectors were energy and healthcare. Healthcare was up 0.9%, and energy was up 1.2%. The two worst performing sectors were technology and consumer discretionary. Tech was down 3.5%, and consumer discretionary 7.9%. Retail really got slaughtered quite sharply, and that was led by Walmart, Target, and Costco. Afternoon on Friday, they were still down over 10.25%, but got saved by a late rally Friday afternoon. Media communications was down 1.7% for the week. Technology was down 3.5%. Consumer discretionary down 7.9%. Financials were down 1.85%. The industrials were down 3.8%. Real estate was down 1.7%. And basic materials was down 0.1%. For the week ending May 20th, the 10-year Treasury bond yields went to 2.787%. This mainly reflected the large sell-off in stocks and the subsequent money market purchases that get triggered automatically. Do not be encouraged by this rate falling. This is textbook, transitory, and will not result in lower mortgage rates for more than a week or two. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and NASDAQ indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this bear market.